Hello, everyone. Let's do and see whether you can hear me and see me. I would like to see in our chat the feedback. Okay, I can see it in the Russian room. Thank you. So I guess you can hear and see me. It is Tuesday again, and it is the fourth time during this season that we're meeting on the topic of Genius of Finance. And the purpose of today's meeting is Q&A, to have a Q&A session. So we already shipped more than 1,500 boxes across the world. And probably you already have questions related to the gameplay. We prepared a special form and we will give you a chance to add your questions to it. But meanwhile, we will discuss what problems players most frequently face and try to address those game situations. Let me introduce myself. I'm Tatiana Zhuravlyova. I'm a certified Genius on Finance presenter host. So we are in charge, my team is in charge of the development and production of the boxed version of the game. And also we're developing the online version. And Tatiana Turkova will assist me in holding this meeting. She's also a certified Genius of Finance host, and she has 4 years of experience of hosting and playing the game. And Tatiana, I see, is already with us. And also Tatiana Turkova is a methodologist in the Private Investor Academy. And she also set up and configures the platform in addition to conducting Genius of Finance game sessions. So let's see what kind of a schedule we have and how long this meeting will last. Okay, this meeting is planned to take 40 minutes. And if you still have questions after this meeting, we are ready to take them. And we will talk about the tax calculation, net profit, return. It says here yield, but it's return mainly, dividend income, loans and repayment of loans. And also there will be a topic on how to learn to count. So basically, we will have to see how to take loans, how to calculate loan payments, and how to pay loans early, and so on and so forth. We will do a lot of practical things. So take a calculator or open your smartphones, because you will need a calculator, and also take a piece of paper and a pen or a pencil, because there will be notes to write down. And please go to the next slide. So see what are the common mistakes in the game. People very often make mistakes in calculating their taxes, and they calculate taxes not on the profits as it is required, but they do it from their gross income, which is not correct. And today we will look into it. Also, people very often confuse the terms net profits and gross profits, gross income. And I think that the net profit is after they pay taxes, and it means, yeah, that's it. They got their net profit. That's not always the case. Also, we will calculate the return, because very often when there is a transaction with your partners, not everyone knows how to correctly calculate the return or the transaction yield. And they think it depends on the initial investment amount. Sometimes it is, and you can do that, but there are also different partnership schemes. And not always partnership schemes allow you to easily calculate the transaction yield, and sometimes you have to calculate your share, your stake in the partnership, and it is not always equal to the amount of money you invested. So sometimes there is a disproportion between the amount of money you invested and the stake in the partnership. Also, there are some issues that partners face with calculating their dividends. And sometimes they calculate the dividends on the price at the time of the purchase and not the current market value as it should be. And here I would like to give the floor to Tatiana, and she will look into one of the situations for you or with you, and we will calculate or make all the correct calculations that have to be made during the game when you have to calculate the tax, net profit, return or yield, and dividends. Tatiana, you have the floor. Guys, could you please tell me how well you can hear me? Give me a plus in the chat or a 10 or something. Yes, Tatiana, we can hear you. Good. In this case, I would ask the moderators to go to the next slide. Okay, then. So dear friends, I wanted to tell you once again that yes, today we have a practical webinar. Therefore, please take your pens, your notebooks or notepads and start writing down, because we want you to work with us, analyze with us, and not just listen to us, because we are going to have a home assignment for you. So why is it important? It is important for anyone, both for the hosts and who hold sessions, game sessions as a host, but also for people who just bought the box to play with their friends and family. And also for people who intend to buy. And some preparatory work is very important for you to be able to deal with any kind of calculations. Therefore, it will be better to study ahead and then to play the game faster and get to your dream faster too. So we have quite a specific task here. Please read the slides. So 100 shares were bought at a price of 20 units. So after some time, the price of the shares increased and became 500 units. And in this moment, you decided to sell part of your assets to use that money for some other purpose, maybe increase your portfolio or something else. So what you do is you sell 50 shares at the price of 500 units each. So you have to calculate the tax. In this case, the tax is 35%. Of course, in every country, they have their own tax rate, and it can vary. The tax rate can vary. And you can apply the tax rate that is enforced in your country, but we took the average percent tax rate of 35%. Also, I would like you to consider what kind of dividend yield that share has, which is 2% per month. Please write down all these inputs and we will start working with it. And meanwhile, we'll go to the next slide. Also, I wanted to say you one thing. If you can't follow and you don't have time to write it down with us, there will be a recording of this webinar and you will be able to go through it again. So as Tatiana said before, the tax is calculated on the profit, not the entire sale amount. For example, you sold your asset, you received a certain amount of money, and the common mistake that people make is they try to calculate tax on the entire sale amount. This is not correct. We first need to see what kind of money we spent to buy this asset, and only then we calculate the net profit and calculate the tax on that profit. I think this is more or less clear, and write down this formula, please. So let's move on. We will do some calculations. The next slide, please. Okay, dear friends, take a look. Now we have quite specific numbers, and please be attentive here. How do we calculate the net profit? So basically, we remember that out of 100 shares, we sell only 50. The original cost of the shares was 20. We multiply 20 by 50, and we get 1,000 units, which is the amount we invested when purchasing 50 shares. So those 50 shares that we do not sell, we don't even consider them. Next, we determine the amount of shares sold. As we remember, a certain time has passed and the share price increased. And now one share costs 500 units. So we multiply 500 units by 50, the number of shares that we're selling, and we get 25,000 units. This is the amount of money you get for selling 50 shares at the price of 500 each. And now we can determine the profit. And this is not yet the net profit. The net profit comes later. We will calculate it later. For now, it's the profit, which is the difference between the invested amount and the amount received at the end of the sale. So the amount received is $25,000. You invested $1,000. So the overall profit in this case is 24,000 units. 25 minus 1,000 equals 24,000. So this is the amount, dear friends, that the tax will be calculated on. And now we can calculate the tax itself. So basically, we take 24,000, we multiply it by 100. We want to calculate 1% out of those 24,000. And we multiply it by 35, which is our tax rate. And I would like to repeat for those who have just joined us, or maybe who didn't hear it or pay attention to it right away, that 35% tax rate in this case is the tax rate, average tax rate. In your country, it can be different. And if you want to apply your national tax rates, then instead of 35%, you can put your number here. I think this is more or less clear to everyone. And now we are calculating the tax at the tax rate of 35%. So after all the calculations are made, we see that the tax amount is 8,400 units. I think you're writing it down, you're keeping up with us, but let me repeat it again, that there will be a recording and you will be able to go through it again at your leisure. Now, we calculated the tax amount on the sale of shares. Now, let's see what is your net profit, how much money you get after all the taxes are paid. So what we do is we go to a little bit above, and we see that the amount of money we get when we sell the shares, which is 25,000 units. Out of that amount, we have to deduct the tax that we have to pay. 25,000, which is the sale amount for 50 shares, minus the tax amount of 8,400 equals 16,600 units. So this is the amount you receive after tax. Again, this is not the net. Oh, this is not even the net profit. I'm sorry, guys. This is the profit you get after you pay the tax. You sold your shares, you pay the tax, and this is the amount of money you get on your hands. Well, I can see only the Russian chat here right now, but if someone tells me whether it's clear or not, I would be very grateful to you guys. So guys, could you please give me a plus or a minus in the chat, whether I understand or don't? So guys, it's not net profit yet. It's the amount of money you get after you sell the shares and pay the tax. So it's very important for people to for everyone to be clear about it. Okay, I see that in the Russian chat, people understand, and we can move on. Let's go to the next slide. And we remember that we received 16,600 units after paying the tax. And now, guys, finally, we get to the point when we calculate the net profit. And I think you all remember that when we bought our shares, 50 shares, the price was 50 units per share, and we sold 50 of them. Therefore, we invested 1,000 units when purchasing those 50 shares. So how do we calculate the net profit? The net profit is the difference between the amount you receive after selling and paying tax minus the initial investment amount. In other words, 16,600 minus 1,000 equals 15,600 units. Now, this is the net profit that we receive after we make all the calculations. We tried to break it down plain and simple. Now, the next indicator that very often people don't calculate, I must say, and sometimes they don't even understand why it is needed. But truth be told, it is a very important indicator, and investors, they calculate their income in percentages, not in absolute numbers. And I'll show you why it is very important. Now look, the next line in our calculations is as follows. What we do is we calculate the percentage or the performance of our transaction, of our investment in percentages. We invested 1,000. The net profit is 15,600 units. We already calculated everything, deducted the initial investment, the tax. This is the net profit. And you can write down this formula in words first, and then you add the numbers as an example. So we take the net profit divided by our investment and multiply it by 100%. And let's apply it to our case. So the net profit is 15,600. We divide it by 1,000 and multiply it by 100. So it turns out that our return on this investment is 1,560%. Do you think it's a good return, dear friends? Give me a yes or a no in the chat. I would like to see your feedback, whether you think 1,500% is a good return. Yes, it is an incredible return. People are saying very, very much. Yes, it is. And now I would like you to calculate and see the difference here. It's very important to see that percentage ratio. Imagine that you have the same amount, 16,600, you paid all the taxes, but instead of investing 1,000, you invested 5,000. And I'll calculate together with you. So what we do is we take 16,600. I'm calculating along with you here, guys. And we multiply, or we deduct 5,000. So our net profit is 11,600. So guys, it's just for calculation purposes. Imagine that instead of investing 1,000, you invested 5,000. So instead of getting a net profit of 15,600, you get 11,600. 1/3 maybe. So what we do, we take 11,600, we divide it by 5,000, our investment, and multiply it by 100. If already someone did it in the chat, you can write the figure that you came up with, the result. And I'll tell you that with the same amount, 16,600, but with the investment of 5,000, the percentage return is 232. So in money, we get 11,600, whereas in percentage is 232. the income is only 1/3 lower, but in percentages, it's like less than 6 times lower. So you must agree that this is quite a huge difference. That's why I wanted to dwell on it, to show you how important this indicator is. Return in percentage. During the training, a person receives a huge result, but in absolute numbers. And they think, this is how much money I made. It is cool, yes, but it is very important to calculate this particular indicator. What is your return on investment in percentage? And, you know, this game, a person who has the highest percentage wins the game. So when you invest little money and get bigger return, not absolute figures. I hope this is more understandable. But guys, if you give me a plus in the chat, that will be sufficient for me to understand that you understand what I mean. Okay, guys. So this is some practical webinar, not theoretical, guys. It is very important for everyone to understand. Tatiana, can I add here, says Tatiana Zhuravleva. I would like to add one more thing here. When we changed the content of the game last year and we're thinking about how to improve it, make it clearer, what else to add, the author of the game, Andrey Khavratov, our CEO, you must have attended our previous webinars and know that the author is Andrey Khavratov. He then suggested making changes to the balance sheet forms. And the reason we did it is that in the bottom of the balance sheet form, there is a section dedicated to all those indicators: return on investment, investment amount, net profits, and so on and so forth. For you to understand not only how much money you have in absolute figures and what new assets you have or what is your performance, but also to know your return on each transaction or on each investment that you make into different projects. And here it is very important to understand what yields you bigger return and where, by investing into different projects and investment areas in the market, you get the biggest return. That's why we are focusing so much on the performance return in percentage, because the game, you win in this game if you get the biggest return in percentage. And this is one of the biggest changes made in the game, because in the past we just considered the absolute figures of the money you have on hands and your income amount, and who had more money won the game. Whereas for a real investor, it is more important to see how much return they get on each investment and transaction rather than absolute income amount. So hopefully you now know how to calculate this indicator and how to fill in that summary balance sheet section in our forms in order to know who won the game. Tatiana, I'm passing on the floor to you. Please continue. Thank you, Tatiana, for a very good addition here.
Look, let us assume that you invested 1 million and you have back 1,200,000, but after investing 500,000, you get back 1 million, and you will understand that the return will be higher in the second case, although he has 1 million on hands rather than 1,200,000. So this is an important indicator. And if there are any questions, as Tatiana has just said, you may ask them. Let's move on. What else do we need to calculate? We remember that our portfolio still has 50 shares. The remaining 50 shares is in the portfolio yielding return income. And from the very beginning, we wrote down that the dividend income is 2% per month. what do we need to estimate? We need to estimate the value of the total value of the asset retained. You look at the market price at this particular moment, and in this case, it is 500 units to be multiplied by the number of shares remaining number of shares. And we get the value of 25,000 units as the remaining value of the shares in your portfolio that still generate income. Now, let's estimate the income. 25,000 to be divided by 100, and then you multiply it by 2% per month as the dividends. In this case, 2%. And you get, after doing this math, 500 units. This is your monthly return from 50 shares bought. And if you remember, the original price of shares was 20. 20 units to be multiplied by 50 is 1,000. You invested into this asset 1,000 some time after, and now every month these shares, this asset generates 500 units return. So meaning that in 2 months, your investment is paid back and generates profits. And this is the idea behind investing and the idea to learn it better and better. So we estimated net profits, the interest of after selling the shares, the remaining asset in your portfolio, and your monthly income. And all this is required to select different instruments into your investment portfolio and to estimate the maximum return or income you may generate by your assets. Let's move on. And the next slide, please. Now I will read out your home assignment, and we are getting to the end of our but it's not the end of our webinar, as we will estimate the loans. So home assignment on the material just studied. Please take note of it or make a screenshot and work with it at home. I will read it out so that you will do this exercise. So, assume you have bought 5,000 CIU tokens of 1 unit each. The company pays an income of 1% a month of the market value. At that time, the number of tokens bought is 5,000, and the income paid by the company is 1% a month. The market price of the CIU token after some time has changed and it has increased. And at present, the market price of the CIU token is 100 units, and the dividend has increased by 100%. What do you need to do? You need to estimate the market price of your whole asset. You bought 5,000 CIU tokens. Now the market price is 100 units, and you may estimate the price of the whole asset. And after knowing the value of this asset, you may estimate the income per month and read carefully the assignment. And don't forget that the monthly income increased as well. So first of all, you are to estimate the percentage at present. The second assignment is quite similar, but this is like exercising for you so that you study quickly, because the estimation is really important and vital while you invest. But as well as your way of investing and the way you will distribute. With estimation, gradually you will learn how to do it automatically. Well, the second assignment, you have bought 5 options at a price of 1,000 units each. The dividend was 2% a month. Sometime after, the price of the options rose by 300%, and please note, by 300%, meaning that 1,000 units, this is the price, to be the price of these units, so it should be increased by 300%, and the dividend became 4% of the market value. Well, the same actions, you are to estimate the value of your asset at this particular moment and then estimate your income to be generated monthly. At our next webinar, which will be about similar explanations and answering your questions, we will show you the correct way to do this exercise. Therefore, please attend our webinars, study together with us, and we will be able to improve further. Well, next slide, Tatiana is with us, and now she will tell us what to do with the loans and how to estimate them. Thank you, Tatiana, for your explanations and clarifications. You know, it was like in a classroom. Seriously estimating the formula, when you play, it looks much easier, but nonetheless, there are a lot of mistakes made, and not every player understands how to do this estimation. And therefore, together with Tatiana, we decided to explain how these estimations are done. And do you remember last Tuesday, we said that the training game and the financial literacy. So here we study different terms, net profits, net income, and return, but at the same time, it's not vital to know the term itself, but to be able to estimate, as estimation skill is very important, and we develop it a lot while playing the game. The more you play, the easier and faster it will be to do these estimates. Well, the second part I want to focus your attention to is how to estimate a loan and to pay it off, to pay it back. When newcomers come to our games and they get some spaces and they don't have enough cash, the following may happen generally. Following samples from our life, players intend to go to a bank and get a loan, irrespective of the amount. They believe that the bank will grant a loan, must grant a loan, but it's not the case. And let's have a look and see when a loan may be provided or not, and how to know the decision of the bank. So this is the inputs. Your monthly income, for instance, when you choose any of the profession cards, there is the field income, and your monthly income is 5,000 units, and you have expenses, a lot of expenses. They are indicated in the profession cards. For instance, in this case, your expenses a month are 3,000. Net profits is the difference between your income and expenses, and this is 2,000 units. This is your starting conditions. And you get a space of entrepreneurship or business opportunity, and you are offered a very interesting deal or transaction that requires investing of 100,000 units. And the new players who barely understand how to raise investments, they understand that they have no cash, therefore they will go to bank and request for a loan. A bank at the same time sets some conditions, and it could be found in the rules of the game, but the interest per annum is different for different countries. So generally, it is from 5 to 15% per annum. And when you host a game, try to find out the average interests on loans in your countries and make these terms aligned with your regional context. Make our training quite close to the context in your region. And at the same time, the maturity of the loan is from 2 to 5 years. Generally, this is a consumer loan. And let us estimate both these variants. So with a low interest and with different maturities. Next slide, please. Look, first of all, let us estimate the interest on the loan. The loan amount is 100,000 with 5 or 15% of interest per annum. So both of these cases will be estimated. The first option, 100,000 at 5% per 2 years. We multiply all these figures and eventually we see that you will have to pay back 10,000 as an interest, 1,000 as a loan to be multiplied by 5% as an interest per annum to be multiplied by 2. And the same applies to the other terms. So the maturity period is 5 years and the interest is 15, 100,000 to be multiplied by 15 to be multiplied by 5, and it makes up 75,000 to be paid back to a bank as an interest. Whereas we wanted to get a loan of 100,000 and it is called the principal loan. But to understand the final amount to be paid off to the bank, you are to add the principal loan to the interest. In first case, it will be 110,000, whereas in the second case, it will be 175,000. Please write this down if you understand what the principal loan is and how to estimate the percentage. And it is very important because many people are stuck at this point. And the total amount is known. And now we are to estimate which amount to pay off to the bank. The key thing is that all the banks use this issuance system and you pay back in equal parts. How can we do it? Since we have months and every month we are to make a specific payment, then we are to estimate how many months are there. So 2 years to be multiplied by 12 months, this is 24 months. And in the second case, the maturity is 5 years, and it turns out that 5 years to be multiplied by 12 months, and we get a figure of 60. And therefore, and the total amount for the first case is 110,000 to be divided by 24, and we get this monthly payment of 4,583 units, whereas in the second case, in case the maturity period of a loan is 5 years, so the total amount to be paid back to the bank, that is 175,000 to be divided by 60 months, and monthly we are to pay to the bank 2,917 units. Do you understand how to estimate the monthly payment to be made to the bank when you get a loan? In equal parts monthly, we pay back our loans. And even without asking for a loan from a host, you may estimate on your own which loan you may get and whether it will be approved or not. The way it is estimated, we remember that under the terms and conditions, our monthly income is 5,000, our expenses a month are 3,000, and our net profits is 2,000. So, and the rules, page 9 in the Russian version, if you open the book of the rules attached to the game, in page 9 you will find the way to close the loan. The monthly payment on a loan should not exceed 50% of the net profits of a player a month. So the net profits of the player is 2,000 and the monthly payment in the first case is 4,500 and in the last one almost 3,000. So the bank will not approve this loan. You may not count on a loan because your solvency prevents you from paying back these amounts monthly. And it turns out that, first of all, you are to estimate the amount of a loan, maximum amount of the loan you may get from a bank, and only then you resort to a bank. First of all, I'd like to note that many banks provide a loan for your future return. For instance, you have a transaction, it is very profitable, but this business is not set up. It hasn't been set up yet. You simply intend to make an investment, and it is not clear how the market will behave and your business will behave, whether you can launch it correctly, and the bank will never provide a loan for your future return, only when it is backed by your current solvency. So your monthly income, your monthly expenses, estimating your net profit, and whether you will be able to pay off the amount of the loan you would like to get. And in the next slide, by the way, you stress it a lot because when we have trainings, quite often players request a loan for the future return. So in the card, there is the minimum business plan and it is written down the return is 5,000 or 10,000 units. And they say that this return will be amount to pay back my loan. This future return is not considered. There is a possibility that the bank may provide you with a loan subject to a security, to a collateral of your existing business. It is possible, so when a player has some business and it generates some income, then the bank evaluates this business and extends to you the amount subject to your existing business, but the business which is not existent yet, future business. So this figure is not considered. And you may clearly understand that the business may be, so the income may be generated or may not be generated. So thank you, Tatiana, for giving me some space to intervene. There is one more thing, Tatiana continues, that sometimes players may use their houses or cars as a collateral, and even those that are not used as commercial real estate, but whether they live, and to get a loan for a transaction, they are ready to use their real estate as a collateral, and the loan amount is quite small, whereas the value of the asset or the liability they collateralize is substantial. And then when they fail to pay it back, then this real estate is seized is taken by the bank, and therefore you must be cautious whether to use it as collateral or not. So what are the risks at stake in case the business you take a loan for is a failure? Because in the game there are such situations when there is the news cards about the market decline or something bad happening, and therefore please be cautious trying to understand why you take a loan and how you will pay it back, even if the investment opportunity is a failure for which you take your loan. In this particular case, I actually didn't use an example of a collateral. We took an example of a consumer loan without using anything as a collateral. Whereas in the next slide, let's have a look the amount to be taken. Let's come back to our starting conditions. So the starting net income is 2000. So what is the maximum amount of the loan to be approved? We've already know that the payment under a loan should not exceed 50% of your net profits. Therefore, your start income is to be divided by 2, that is 50%. It means that the maximum payment under a loan should not exceed 1000. And knowing this figure, let us estimate which amount you can get as a loan, the total amount to be paid back. So in the first case, the maturity period is 24 months and 60 months. In the previous slide, we discussed where we got this 24 months. When the maturity period is 2 years and 5 years, it makes up 60 months. And in the first case, you are to pay back to a bank 24,000, whereas in the second case, when it is for 5 years, you are to pay back to a bank 60,000. This is the total amount to be paid back. The way to estimate the principal loan. So we take this total amount to be paid back and divide by 110%. Where did we get 110? In the first case, the interest on a loan was 5%, and we paid it back 5 years. 5 by 5, 110, and to be multiplied by 100 by the principal loan, and it means that in the first case you may get from a bank not more than 21,818. You'd better not risk and take the full amount, but roughly it is 20,000. Whereas in the second case, 60,000, the money to be paid back to be divided by 175. Could you please write down in the chat box where we got this figure 175? 175. So the interest on this loan was 15% and 5 years. 15 to be multiplied by 5, we get a figure 75, and 100 is the principal loan. Therefore, so the principal loan, which is the 100%. So therefore, 100% plus 75% as the interest, we estimate the interest of the whole amount. And in this case, the bank may approve the amount which does not exceed 34,000. And you'd better not risk, but take a loan of about 30,000. And it happens that when there was a transaction, let's come back to the starting conditions. Back then, we said that you have 2,000 of net profits and you get a space to implement any investment transaction of 100,000 as the investment, and the bank may approve a loan for 2 years of 20,000 and for 3 years of 30,000. All the rest is to be raised in other way. At the same time, I recommend never to get a loan to sign any investment transaction. It's not adequate. There are a lot of ways, and we study them at the game Genius of Finance, and the host will always explain and give you some hints how to do it, and you can enter into a transaction without having any cash. And moreover, some players actually use this way and they enter into a transaction without having any money, and they find the terms and conditions that are both of benefit to the player, to the initiator of the transaction, and his partners. So the whole amount of 100,000 could be raised by different means without investing anything on your own. And this way, we teach our players of the game Genius of Finance to take advantage of your benefit, to conclude some transactions and to make partnerships with other partners. Hopefully, you understand the way how to estimate the maximum amount of the loan to be approved by the bank under these terms and conditions, and it will be approved. So today we studied two cases. One is on tax payment from after selling the asset, and the other one is loan estimation. And please note that many players, when they start getting high income and they have substantial amounts of cash, they try to pay back their loans early. And this is proper. The sooner you pay back, the faster you get some income. So, meaning you save up your money by paying your loan early. And early payment back, quite often there is a situation that a player in the balance sheet sees the amount to be paid back and tries to pay it back. It's not a correct approach. You are to have a look at the maturity, at the quarter you took this loan, and the time when you paid back. And the difference between these early, it could be 6 months or 9 months or 12 years of making your payments, but you this way reduce your expenses on paying back, and the total amount to be paid back should be deducted the amount of already paid, and you pay to the bank the difference between these two figures. This is the difference to be paid to the bank. And here, the certified hosts always take note of this and try to help all the players to estimate the appropriate amount to be paid off to the bank. Yes, Denis, including the future interests, not only the principal loan. And even in the book of our rules, so the initial estimate was there, and we paid back fully without estimation or re-estimation of interests, whereas different banks offer different schemes, and there may be re-estimation, recalculation of interests, but to simplify our game so that we don't deduct the percentage which is not to be paid in the future, this full estimate is left intact, and we believe it's enough to teach our players so that they in principle understand the difference between the paying back of the total amount and the remainder when you pay it back early. When it's not the first game you play, but you've had many games and you're quite experienced, then you may estimate this interest. But I don't recommend it, especially at the initial stages when the game is hosted the first time. Then there is a matter of loans. Experienced players are reluctant to get loans because they know how to enter into transactions without getting a loan from a bank.
Basically, they don't take loans to close deals, participate in the transactions. Well, that's it. We have considered two topics, and let's go to the next slide. And I would like to remind you the favorite quote of our CEO and the author of the game. And I very much agree with that quote. And the more you practice, the more you play the game-based simulator Genius of Financer, the faster you will understand the fundamentals of investing and start applying it into practice. Because if we practice something, we master the skill way faster than just reading the books or receiving theoretical knowledge. Of course, you will need theory anyways. It is important and necessary, but the sooner you start playing and calculating with our training, the sooner you will start applying it into practice. Can I have a say? Says Tatiana Turkova. Yes, sure. Dear friends, try to play as many times as possible and with different people. Don't play with the same people all over again, because the more different people you play with, the better you know the game. Even I, as a certified host, very often find out new things, new ideas, new notions, new projects, ideas, ways of solving situations and tasks. And it is very, very useful to periodically and continuously play this game with new people and find out new things and get new knowledge. And Tatiana, can we share in the chat the link that our partners can use to ask their questions? Yes, dear partners, we prepared for you a form. It is in all languages, and you, ladies and gentlemen, can ask your questions in that form for our next Q&A session. And I will ask the moderators to share those links in the chats, and you can write your questions there. You can write as many questions as you want. We will have them translated, and we will prepare them for our next meetings. We will prepare our next Q&A session based on this list of questions. I know that you have questions not only about the gameplay, but also where to buy, where to play, and so on and so forth. But those questions will be handled at a different webinar, a webinar dedicated to the presentation of Genius of Finance. Also, we have another topic, which is called the School of Promotion, how to convey the information to your friends and relatives, what you do, what kind of game it is, and so on and so forth. And this kind of information will be given during a third type of our webinars. It's a school on promotion of Genius of Finance. And I think very soon we will start holding those classes as well. Currently, we have two types of webinars. On 1 week, we talk about the game itself. We present the game. We tell newcomers, first-timers, what kind of training it is, how to play, what it gives, why it is necessary for, and so on. Whereas today we have a Q&A session, and the more questions you ask, the more effective our next session is going to be, and the whole feedback is going to be. Currently, we prepared the list of frequently asked questions that we are aware of, like people that come to us and the mistakes that we see people make. And we will include all those mistakes and questions in our webinars as well. Tatiana, could you please announce our next meeting and tell us what we're going to have next, and we can wrap it up? Well, our next meeting will be dedicated to answering all of your questions. So please fill in the form. They are topical for everyone, not only for you. As you might understand, lots of people can be interested in different questions. And next time we will see how to create a business in the game, how to calculate the equity participation stake, how to calculate your income when you are not 100% owner and you have a stake in the business. Many people have difficulties in calculating their income, especially if the equity participation is not equal among the partners. What if you invest a small amount, but instead you get a bigger share in the business, and the other way around? So a lot of different game situations. So please come to our next webinar, and we will look into how organizing, setting up business with different equity participation stakes. Hopefully you found this webinar useful. If you did, give us a plus in the chat. And if you're eager to hear more, and if it wasn't useful, give us a minus. So I see pluses in the chat. Great. Well, I don't think it wasn't useful at all. Usually we give quite useful information, the information that our partners need to know, and those who practice the holding of such games, and those who bought the game for themselves and would like to hold the game for their friends, family members, relatives. Well, I didn't even doubt that there would be pluses only. Okay, then let's switch the slides to one more slide, and I would like you guys to urge you to play this game as frequently as possible. It does develop your financial thinking and financial literacy. And as I said during the last week, it is not only important to know the terminology and know how to calculate different indicators, but also it is important to act, to learn, to close the deals, to hold negotiations, to shape partnership offers, to participate in different sectors, diversify your business, your investments, apply all the 8 rules of a private investor. And our training game Genius of Finance is meant exactly for this. So I would like to bid you farewell. I was pleased to be talking to you, and next week we're going to have one more presentation of our product. Tatiana, we call it a day. Yes, thank you very much, dear friends. Good luck. Have high performance and high returns of your investments, and see you later. Bye-bye. We'll be waiting for your questions in the forum and preparing the next webinar specifically on what was not clear for you. Bye-bye. Till we meet again.